Well, the stealth collapse of the Silicon Valley bubble continues. On Wednesday, the SEC announced it charged Theranos, its founder and CEO Elizabeth Holmes, and former President Sunny Balwani with a, quote, massive fraud. As part of the settlement, Holmes will pay $500,000, forfeit her stake in Theranos, and be barred from serving on a public board for a decade. Back in 2014, Theranos was the $9 billion medical startup that would change the way blood tests work. Except the science didn't work and it all fell apart. And this story has it all. There's the Stanford dropout wonderkin starting a company to take on incumbents, a board full of decorated military and business veterans, wealthy tech investors who see themselves as underdogs because they are taking on big medical. And because this was the private market, no one was entitled to know what was happening, until they found out that nothing was. Now, recently, venture-funded unicorns have been more and more reticent to go public, citing some combination of the short-term thinking of Wall Street and the onerous demands of SEC regulations. And look, maybe I'm the shill because I cover public markets and think they ultimately serve a public good. But Theranos investors would have clearly been better off if public markets had set their gaze on the company. And it all just makes you think what other private companies are hiding just outside the market's regulated sites. Now turning to the schedule for Thursday, on the economic side, we'll get the weekly report on initial jobless claims, as well as home builder sentiment and the New York State manufacturing activity rating. And on the earnings schedule, notable results expected Thursday include results from Dollar General, Overstock.com, Revlon, and Rockwell Medical.